Big moves in the banking world. The Bank of New York Mellon, one of the largest asset managers in the world, just increased its stake in Bank of Montreal. But why is one massive bank buying shares of another? And what could this mean for investors heading into 2026? According to recent filings, Bank of New York Mellon Corp boosted its holdings in Bank of Montreal by about 18,460 shares during the last quarter, bringing its total position to over 765,000 shares, worth roughly $85 million. So, what does this really mean? When a major institution like BNY Mellon adds to its position in another bank, it often signals confidence in the financial health and stability of that company. BMO is known for its strong dividend track record, expanding U.S. presence, and resilient earnings, even when markets get rocky. So, for big players managing billions, it's a relatively safe bet with steady returns. This isn't the first time we've seen this. BNY Mellon had already raised its stake earlier this year by nearly 38,000 shares, so this looks more like a consistent accumulation strategy, not a random move. Both banks benefit from higher interest rate environments, strong balance sheets, and global diversification, so they're actually playing in the same sandbox but from different angles. For retail investors, this kind of institutional buying is a good confidence signal. It doesn't mean the stock will skyrocket overnight, but it shows that smart money is still interested in BMO's long-term story. If you're looking at Canadian banks for 2026, this might be one of those quiet moves that hints where big investors are placing their trust. Second major move in Canadian finance. Connor Clark Lunn Investment Management just revealed a massive $219 million position in Bank of Montreal. So, what does this mean for the BMO? And why are big institutions betting on Canadian banks right now? According to the another latest filings, Connor Clark Lunn Investment Management Limited, one of Canada's top institutional investors, has built a massive stake in Bank of Montreal, worth nearly $219 million. That's not small money. This kind of move usually signals strong confidence in the bank's long-term stability and growth potential. BMO has been a powerhouse in Canadian banking. Solid dividend yields, strong balance sheet, and aggressive expansion into the U.S. market through BMO Harris. Despite recent market volatility, institutional investors are clearly seeing long-term value here. Remember, BMO's dividend yield sits around 4%, making it one of the most reliable income plays in Canadian finance. When major investment firms like Connor Clark Lunn move in, it often triggers attention from retail investors. It's a sign of confidence, but don't just follow the crowd. Always look at fundamentals, upcoming earnings, and economic outlook before making any moves. So, what do you think? Is BNY Mellon and Connor Clark making a smart long-term play here? Or is it just another portfolio balancing act? Drop your thoughts in the comments. If you found this helpful, smash that like button, subscribe for more Canadian market updates, and hit the so you don't miss the next stock story that could shape your 2026 portfolio.